Oil has been trying to enter the week with gains for the third consecutive week. Since Monday, Brent has risen in price by almost 3%, while WTI has added 13%. The prices were supported by Saudi Arabia's decision to cut oil output by another 1 million barrels per day. At the beginning of the day, the ruble gained ground amid the news that oil hit 1 month's high and China's manufacturing sector showed signs of recovery. The joint efforts of the parties to the deal on oil output reduction should lead to a record decline in world oil supplies in May by 12 million barrels. If everything goes as anticipated, the figure will reach 88 million barrels per day, the lowest level for the past 9 years, the International Energy Agency calculated. The agency revised its second quarter forecast for hydrocarbon demand upwards. These figures encouraged investors. They remained optimistic but cautious. The market sentiment can be affected by negative news, including the data on the coronavirus pandemic. Besides, demand estimates are volatile. Traders continue to mull over the gradual easing of quarantine measures in different countries, hoping for demand and supply recovery in the market. In the early previous session, Brent went above $32 per barrel. Closer to midday, the North Sea crude futures contract for July was trading at $31.91. WTI also added in price. The nearest U.S. crude oil futures contract was traded at $28.29. Yesterday's oil surge, driven mainly by the IEA's upbeat report, allowed traders to hope for a possible way out of a sideways trend. Brent has traded in the range of $29–32 per barrel for about 2 weeks. If buyers manage to break through the resistance zone of $31.82–32.25, the price is likely to make a technical advance to $35 per barrel. However, traders should not have high hopes for further growth of the quartz. Fundamentally, nothing has changed. Despite a gradual decline in oil production, there is still oversupply in the energy market. The huge reserves of raw materials accumulated in April remain useless. Thus, any negative release in the market can bring the prices back to the level of around $30 per barrel. Yesterday, the ruble gained ground against the US dollar. However, from a technical point of view, there is no significant change. The dollar-ruble pair is still trading in the range of 73–76 rubles per dollar. Nevertheless, the market continues to wait for the downward triangle pattern to be completed. If this happens, the ruble is likely to assert a strength in the medium term after breaking through the level of 73 per dollar. Today, the Russian currency can try to stay firmly amid positive macroeconomic statistics. However, it will hardly make a significant upward movement. There is no reason to believe that the dollar-ruble pair will go on to the area of strong support at 72.70. Therefore, then the ruble approaches the 73 mark, it's better to close short deals and look for an opportunity to buy the US currency. The central bank's foreign currency sales and the tax period starting today serve as local support for the ruble. That's all for now. We wish you profitable deals. See you on our channel with a new video in a couple of hours.